First is about the retirement situations. We can look through quickly this part because we all know this totally. Also, I think we don't have enough time to waste on this part.
I will introduce their financial situation and income source. As we could see, there are four sources of their retirement income in cash. Um, One is annual interest income from portfolio investment. This part is a little bit risky, and we could use it for other investment after their retirement. And one is dividends from mutual funds, and two are their MPF.
The next are the problems that the ones could met, and we divided into parts. One is about financial and another is about personal. First, I will explain the financial problems. Based on the above information, it can be found that their annual net income after retirement is not up to their annual expenses. Well, clients do not provide how much cash they have in their assets, but the chances of a lot of cash are slim. As Hong Kong's population aging problem, social welfare does not meet their demand for money. It is predicted that they will live to be 80 years old, and the total amount required will be about HK dollar 3,850,000, and even if the money in MPF is offered, they can barely meet their expenses for 4 years.
Some physical problems for them, like as we know, they have been 60 more years old, so there may be more potential health problems for them, and as a result, the cost of medical and healthcare will be higher for them than the normal people. Otherwise, there might be more uncertain accidental risks because we know Michael and his family likes traveling, and they would spend more time on their retirement life. So the expenses on traveling or lifestyle will be higher as a result. And they don't have any salary income after their retirement.
Based off the balance of the MPF account 4 years after their retirement and this table, it can probably calculate that their wages are close to 30,000 or more per month. It can be inferred that their deposits are basically sufficient. According to online data, the amount of savings saved by Hong Kong people after retirement is about 3 times their annual salary. According to their salary of at least 30,000 per month per person and an annual salary of 400,000, their retirement cash account of them is about 2,400,000. Since they spent RMB 500,000 HK dollar 1,710,000 without a mortgage to buy a house 5 years ago. It can be concluded that they still have the remaining cash of 690,000 minimum. Next is about retirement planning and the solution of financial part. Because of the portfolio gains and losses are unknown, in order to reduce the risk and let it can convert the risk into fixed income and make up for the funding gap they will generate in future to maintain the rate of return to meet the quality of life. It is suggested that the Android and Michelle should use part of the MPF account and another part of the cash savings amount by immediate annuity, which is generally more suitable for retirees because retirees generally have money but do not have income. They can consider buying immediate annuities with savings and part of MPF accounts. It will then receive long-term stable annuity income to help make up for daily living expenses. At the same time, because their property in the mainland is ideal for term month per year, they can rent the house and charge the rent. At the same time, they should spend less and lower the standard of living in order to avoid the situation that they can't make ends meet. In order to let them get more money from now, I think they can put 50% of their cash account and MPF account to buy insurance to get immediate annuity income. Through calculation, we can get that they can have income per year about 84430. If they rent a house in China, through the calculation use the value of their deposit in bank can get how much money interest per year. They can get the return you want and inflation by additional. It can get 10505 per month at least, and 10 months. It can get totally 119757 HK dollars. According to the above calculation, it can be figured out that if the new asset distribution can be achieved, at least this figure plus together is about 241955 HK dollars. If not, Michelle's long-term US fund draw can be replaced with a higher return investment. Or not, it must reduce their expenses.
According to the research, the annual cost of healthcare and medical expenses for the retired people over 65 years old is expected to be 285,000, and for single retired, the cost might be less, but it might be higher for the women. To make sure they will enjoy their retirement life without much worries about accidental risks, because they are always traveling and relatively they are healthy in that age. So a life insurance is more suitable for them, and we could pay the premium about $100,000 dollars in one time with Michael's investment portfolio for the two people, and they will get amount of accumulated dividend when there is accidental death. And the dividend is annually growing from next year because they pay the premium one time according to the rules. And insurance is more flexible and have more service than other investment portfolio or MPF. And the benefit and service period is lifetime for the beneficiary. So the beneficiary could be each other for the couple. This would be better for them if one died first for another to continue his or her life.